Good morning, Jim. Hey, this is Chuck
Hey,
McClure with
Chuck.
EXP Realty.
Great to
Um,
be with you.
Thank you. Same here. And to everyone that's receiving this pre-recorded uh, Zoom meeting, I want to introduce Jm Duffy. He's with Alcova Mortgage. I think I'm saying that correctly. And
You are.
I've
You
known
are. You
Jim
got
for,
it.
yeah, great. I've known Jim for a number of years. Super good guy, and really has his knowledge base on lending, obviously. And we want to talk a little bit about um, what the cost of waiting. That's something in terms of buying a house. That is something that's prevalent right now with the current interest rate situation, and folks are, on the fence whether they want to move forward today or they want to wait 6 months or a year and see what interest rates do. So I'm going to let Jim kind of give us some information on that, and we'll talk back and forth a little bit about it, and hopefully
Yeah.
we'll answer people's questions out there. All right, go ahead,
Hopefully
Jim.
we'll get all the questions answered. If not, you're the one to reach out to directly to help. But no, thanks for having me and inviting me to do this, Chuck. I love working with you because you are one of the realtors, and I wish I could say that about every realtor, and I unfortunately can't in town, but you're one of the realtors who really listens to the client, what they want, and then goes and tries to find exactly what they want. And
Right.
you're a good negotiator as well.
Thank you.
That's
Thank
what I love about you because so many realtors are like, I've shown you three houses, now pick one.
you. Right, right. Exactly. Well, we
And
obviously want to do everything we can to help make the process smooth and find the best deal
yeah.
financially for our buyers. So I appreciate that.
So talking about the best deal, I'll just share my screen real quick here. Hopefully you can see this cost of waiting
Yes.
up here. All right. So I prepared this at kind of what is typically a first-time home buyer price point at this point, because a lot of times it's first-time home buyers who are like, well, should I buy now or to your point, wait for rates to come down. So I put it at $425,000 purchase price. Let's just get into the report itself here.
Okay.
And yeah, everyone's got a choice right now, right? Home prices are up and going higher, and rates are up, but thankfully going lower. And because we are in a long-term downtrend in rates right now, and there's a lot of pressures coming, not this week, unfortunately, but a lot of pressure is still coming that should pressure interest rates down, and that's a good thing for everybody. So,
Mhm.
should you wait for that? It's a valid question, I think, or go ahead and buy now. And here's the numbers, because if you just look at the payment difference, right? And what I'm doing here is saying rates right now are about 6 and 5/8, high sixes, let's say.
Right.
In a year, we expect them to be give or take a point less than that. When I say a year, it could be 9 months, it could be 18. You know that, Chuck.
Right. Yep.
It's not a set thing, but we're trending toward mid to low fives. So I put kind of high fives here and said, what if we only get there in a year? Well, that would mean that two things. One is your purchase price today would be 425,000 in our example. Based on the appreciation, if you wait a year, you're going to pay 445, almost
Okay.
446,000 for that
Yep.
same home, right? Because of appreciation, the home's
Yep.
going up in value.
Hmm.
However, with the lower interest rate, you would save $129 a month. Your payment would be
Right.
129 a month lower, even though you're paying more for the house.
Yep. Yep.
And that's about $1,500 over the course of the year. So you
Yep.
end up paying $1,500 more if you buy today out of pocket than you would a year from now. And if that's the only numbers, well, then you're better off to wait. However,
Right.
it's not. And these are the numbers that no one talks about, but it's real. And the big numbers are appreciation and amortization, right? So
Right.
the home's going up in value from 425 today to 445 a year from now, give or take. I mean, will it be exactly that? Of course not, but something close to that.
Right. Right.
And then also you're paying down a little bit of mortgage. Not a whole lot, but a little bit. So you're up by $20,000, $21,000 if you buy today because of a appreciation because
Yeah.
home went up $20,000, and
Yep.
that's your if you own it, well, that's your
Your money.
equity. That's
Yep.
your net worth. However, you also paid $1,500 more for the house,
Right.
monthly payment wise times 12. And when rates do fall, you're going to refinance. You just are. You own the
Yep.
home already, so you've locked in the price. Now you just lock in a lower rate at the time of refinancing in, 9 or 18 months or whenever it
Right.
falls that much.
Right.
So there's costs there, but you're still up. You're better off by buying today about $15,000 in that
Right.
scenario.
Yep. It's a big number.
It's huge and people don't think about it. They just think, well, they think about the 1500, but then they give up the 15,000.
Right. Yep.
And to me, that's
Doesn't
yeah.
make a lot of sense. Yeah.
Well, it doesn't make any sense. And
To
and
wait, to give that up when you don't have to.
no, that's exactly right. But that's the number that no one talks about, and that's what I like to show people is, this is the important one, monthly mortgage
Sure.
insurance. So now let's do it real quick at an 850 purchase. We double the purchase price, right? This is
Right.
typically a move-up buyer. Should I stay put or just wait? Um, and you're probably talking 300 a month for that. So let's update this and see what it looks like. And as you would expect, it's well, and it's going to cost more to refi. Let's say 7,500. Oh, apparently I can't change that. Let's see if I can change it. There it goes. Okay,
Yep.
good. All right, so if you don't buy a $425,000 house, you double it to $850,000 house. Well, your appreciation gain is $42,000 over the course of a year because it's the same percentage in Charleston County as
Right.
expected, but it's a bigger number because percentage, well, we all know that. We all invest in stocks, and if you get a 10% return on $10,000, well, that's $1,000. If you get a 10% return on $100,000, well, that's 10,000. So it's just the same here,
Right.
right?
Same principle. Yep.
Yep. And your cumulative difference, you pay an extra $3,000 with the higher interest rate over the course of the year, and you would pay to refinance eventually, but you're still $30,000 to the better
Yeah.
because of that appreciation, because it's yours, not something you pay the then owner for that 31 or $40,000 extra.
Most definitely. Most definitely. Yeah. I mean, obviously, it's a big number. Um, and you talk about money coming out of pocket at closing. This is significant uh, number towards that. If you look at it from an equity standpoint, that you're coming away with now, that
Yeah,
like I say, if you wait a year. The other thing too, and in addition to the numbers, we all expect demand to increase significantly. That's what is going to drive a lot of the appreciation we're talking about. But you're also now putting yourself in competition with a lot more buyers. Maybe something similar we did back in
yeah,
2021, 2022, where you're having to outbid the next person, and you miss out on the house that you really like.
right.
So it's numbers, it's big too, but also maybe the ability to get what you want, and
Yeah, the ability.
you may even pay more than what we're talking about. We're using normal appreciation numbers, and as things happened in 2021, 22, those weren't normal situations, and
That was nuts.
the nut, appreciation was 10% a year, or on
Right.
average or whatever, maybe even a little higher in some cases. So,
I
um,
hope we don't go back to that.
right,
But you're right. Demand will increase because there's so many people. I totally agree with you. And so many people are like, man, I missed it. I could have got a 3% interest rate had I just bought in 2021. However, would you have bought? I mean, so many people didn't. They made an offer and got outbid, made an offer, got outbid, made an offer, said, can you come up 50,000 over asking price?
right,
Got outbid. And then they just said, you know what, forget it. And there were a lot of people like that and
correct.
ended up renting
Yep, no doubt. Yep, yeah,
or staying put. Yeah.
Yeah, for sure. Yeah, staying where they're at.
Yeah.
Um, well, I mean, I think this is a great example, and your explanation is very good, Jim. Jim puts out some nice videos that demonstrate a lot in black and white terms, the effects of various things that affect the marketplace or affect the consumer when buying a house. And I think this is a perfect example. Um, so I appreciate
Thanks.
that explanation, and hopefully we'll get some feedback, and some we may get some additional questions.
Yeah.
Um, I don't
I'm
know.
happy to weigh in where I can.
Yeah,
One thing I'll offer is you saw how quickly we changed this from
yes,
425 to 850.
yes,
If someone's looking at a particular price point, I'm happy to create the same scenario for them at
right,
their price point,
great.
just so they have the information.
Great, great. And also, I think it's while we're talking about it, it's important to point out in your process of going through loan approval, or someone's looking at buying a house, they're able to, through your services, are able to get more than pre-approved, but actually gone through an underwriting process initially where it puts them in a better position
Oh yeah.
to purchase a
That's
house
a
on the
great
front end.
that's a great point. I'm glad you brought it up. That's going to be it's helpful right now
Right,
when rates are mid to high sixes, something
right,
like that. And there's especially competing offers and stuff. No, we
right,
go from a pre-approval very quickly to a full credit underwrite,
right,
and we give a commitment letter, and it says very clearly, we guarantee we're going to close this loan for this buyer. If we don't, we're going to pay the buyer $5,000, and we're going to pay the seller $5,000 for the time. That's how
wow. Great.
strong the commitment.
Yeah,
But
yeah,
that's going to be necessary as rates begin to fall and competition heats up. Yeah,
right,
it's going to
right.
really set people apart.
Good deal. Great.
Go.
Hey, well, I hope that's been helpful. I know it has to me to reinforce the numbers we're talking about. And my background's finance, so I totally get the
Yeah.
point that we're making here. And I'm available to answer questions. Jim's available to answer questions. We work together to try to help our clients. So if we can answer anything, or if you see something you'd like to move forward on, please be in touch with us, and look forward to working with everybody out there. So